Good morning, afternoon, and evening, everyone. I thought I'd try to do something new. A lot of people ask me, how am I able to cover so many different things? Because when people ask what I do, what I keep track of, I say, well, everything. I keep track of stocks, large caps, small caps, individual companies, bonds, currencies, central banks all over the world, all kinds of macroeconomic data, and of course, I keep track of digital assets, including all crypto and, of course, Bitcoin and Ethereum. So what I would do is, I should say, is tell you how I do this. And what I do is I look at all the news and I say to myself, is this a signal or is it a noise? In other words, is it eventful news? So today I'm going to do my first video on that. And it's going to be a screenshot. You're not going to see my face. I don't have to worry about my hair, my makeup, or powdering my nose. So here's what I'm going to tell you about for today. Only two things, so I'm going to end it on a good note. Basically, it's a sea of red. So that's really the bad news. And I've been saying this could happen for a while now, and I'm sure you in a minute. But first, let's talk about the sea of red. And this is the crypto heat map that comes out to you from quantifycrypto.com if you want to do it yourself. And it's shown that Bitcoin is down 4.3% only the last 24 hours. And ETH's down 4.75%, which is normal. ETH's always down a little more than Bitcoin. But then if you look on the right side, you can see there's some big declines. And I'm going to get to that in a minute. Actually, maybe I should just get to it now. Let me just skip over. I'm going to show you the bubbles. And if you see these bubbles, and this is from cryptobubbles.net, you're going to notice that you have a lot of meme coins like Bone, Pepe, of course, Shiba and DOGECOIN are down tremendously. So let's focus on Shiba. Shiba is down 11%, I think it is. Can't see it. I think I have to minimize this. Well, it's not showing it, but if you minimize it, you can see here where my pointer is, and it's blinking here. It's down 11%. And that's because Shiba's having problems with its L2, layer 2, Shiba Uranium or something like that. Well, I don't know if there's a problem, but there's rumors of problems with the layer 2. So my point is not to just talk about Shiba and meme coins. The point is that there's low liquidity. And I know there's lower liquidity because meme coins are going down and altcoins are going down more than Bitcoin. So now let me show you some more information. So again, Bitcoin's down 4.3%. And if you look at the chart here, it's down from 31,000, I think it is, the recent high, 32,000, down to under 28,000. I think it's going to test around 25,000. And if it breaks that, we can go down to 18, 19,000. This is something I've been thinking about for a while, and it's happened because of various reasons. One reason is what's in the news like every day for the last 3 weeks. It's long-term bonds. Here I have the 30-year bond. It was just 1.4%. Let's go to January. It was 1.7% in January 21, and it's been almost consistently going higher. And especially since I guess it was May, it's been going higher almost every single day. And the thing is, it'll go higher, and stocks could go higher too. But what happens is it really reaches a tipping point where people are like, oh my God, we're breaking, like here, you see we're breaking support here of 3.8%, resistance of 3.8, 3.9. So we broke all these 3.8% support level, resistance levels. And now we're breaking the long-term support, 4.3%, meaning we're near a 15-year high. So when we break support levels, this is what causes stocks to go down, and it causes cryptocurrencies, all cryptocurrencies to go down. My thesis is that we're still in a crypto bear. And a lot of people give me heat for that because Bitcoin's gone up a lot. But I was able to pinpoint the bottom around, I think it was November, December 2022. I was able to pinpoint the stock market bottom and crypto and Bitcoin's bottom. However, I did not call it the all-time bear bottom. I called it a short-term bottom. So that was my big mistake so far. But I'm still thinking we could go down. And on Seeking Alpha, this is me, I published Bitcoin's dubious rally, and I gave a whole list of reasons why I think Bitcoin's going down short-term. Some examples are seasonality. This is the first chart here. Seasonally, Bitcoin and even stocks go down between August and October. The biggest decline tends to occur between September 15th and October 15th. So it still might be early for Bitcoin and stocks to go down. So even though stocks and Bitcoin are going down quickly right now, they actually may rebound and then test their lows, not now, but like I said, around September 15th until October 15th. This is all probability and it's not financial advice. I'm just giving you what I know from all the work I've done looking at history. And then I said some of the negatives are regulatory enforcement. You know about that. Here are some of the enforcement actions. You can read this article if you want more information. This is on seekingalpha.com. Negative fund flows. And so everyone's selling Bitcoin and crypto. And then there's the issue with stablecoins and competitive currencies from central bank digital currencies, and issues with regulation of stablecoins. We all heard of issues with Tether, but the government wants to regulate everything. I think they basically want to make stablecoins 100% collateralized by the US dollar, because that would reduce the risk of cryptocurrency and Bitcoin onto the US dollar's dominance. Speaking of dominance, Bitcoin dominance is rising. So to me, when Bitcoin's dominance is rising, that means we're still in a bear market. And then I mentioned large holders of Bitcoins like whales have stopped accumulating. So if you look at this chart, it's a little outdated, but it hasn't changed too much. If you look here towards, I'm going to make a larger view. You look here towards the top left side, if you could read that. It's greater than 10K. These are cohorts, meaning tranches. So these are holders that have more than 10,000 Bitcoin. Wow, I wish that was me. 1K, 1,000 to 10K Bitcoin, 100K to 1K. Hey, I still wish that was me. And 10 to 100 Bitcoin and so on. And you could see here the biggest, when you have it in blue here, when all the cells, these boxes are in blue, that means everyone's buying, whether they're small shrimp or even smaller than that, or whether they're whales, they're all buying. So if you could see that was the bottom. And if you look now, we've gone up and there's been a lot of selling. I know the selling because it's in red here. So what you want is blue and dark blue. So again, this is another negative. And a big negative no one's talking about is tightening liquidity. Now this is very complicated because there's different ways of measuring liquidity. But what I mentioned it, I'm saying a few ways. Number one, there's a Fed Treasury general account. Now this general account was going down towards zero during the debt ceiling. So this general account had to be filled. It's basically the wallet of the Treasury. So when it gets filled, which is happening right now, it's getting filled quickly. When that occurs, this causes a reduction in liquidity. Speaking of refilling, the strategic oil reserves are also refilling at one of the highest rates. And because of the U.S. government strategic oil reserve is refilling up quickly, that is causing some inflation because that's causing oil prices and gasoline prices to go up. But that's another subject for another day. And there's another way of measuring liquidity. Actually, another 2-3 ways. One is global liquidity. What is China doing? What is Japan doing? Japan, by the way, recently said 2 weeks ago, maybe it was a week ago, that they're going to tighten liquidity slightly. And they did this by changing the upper band, I should say, or resistance percentage of their Japanese bonds. So basically, instead of being whatever it was, 0.5%, they've raised that rate to whatever, 0.75%. The point, don't get caught on the actual percentage. The most important, speaking of signal and noise, the most important news is that they're raising the upper level of their percentage of returns of those JGBs, those Japanese bonds. So again, talking about liquidity, another way of measuring liquidity besides global liquidity and Japanese liquidity, as I mentioned, is, and the Treasury General Account, is the Fed balance sheet. As you know, this hit I forgot what it was, $9.1 trillion, something like that. And it's been going down pretty slowly, but it's been going down. So you got to watch that too. And here I chart the Treasury, Federal Reserve balance sheet versus Bitcoin. You can see they're somewhat correlated. So there was, as you know, there was some increase in liquidity during Silvergate, Signature Bank, what it was, SVB, and First Republic bank shutdowns. When that occurred in March, when those banks shut down, this caused, or the Fed reacted, I should say, and increased liquidity. But now that liquidity is declining. Another reason I was bearish because sentiment was too frothy. Here we have the Bitcoin and crypto fear greed index at a greed level. And from the contrarian point of view, that's really bad. And then there's something called derivative positioning. I'm not going to talk about it. It's too complicated. But let's just talk about options, and that's it. The put-to-call ratio was too low. And since I published this article, the put-to-call ratio of Bitcoin and Ethereum went near a record low. So from a contrarian point of view, that's very bearish. And then I mentioned the on-chain metrics, and there's like 1,000 of them. They're off their bullish levels. And here, one example is a pure multiple. You want to buy when it's in the green, and it's gone all the way up to levels it hasn't been since Bitcoin was, as I mentioned here, $55,000. So again, the pure multiple is bearish because it's gone up dramatically from its bullish level where it was green. And then I mentioned the weak technicals, and everyone's talking about low volatility. We've had some of the lowest volatility in the history of Bitcoin. And to me, that means you have a sharp move. That's what happens when you have, you see this in options. When you have low volatility, then option prices and underlines move rapidly. Now, how did I know Bitcoin was going to move down sharply instead of up sharply? And that's because of all the data that I showed you above, like put-to-call ratio, things like that. And then just so we don't forget, I'm very bullish long-term, despite giving you that whole speech of why I'm bearish on crypto and stocks. So I told you that today I want to start something new where I talk about the signal and the noise, like what's the news? So today's news is that interest rates are higher. So there's bad macro news. And here you can see the sharp declining prices over the last 7 days and even the last hour. And again, you're seeing DOGECOIN and meme coins go down a lot. Like Shiba Inu is down 12.2%, for example, in 7 days. And I mentioned the layer 2. So now I promised I would end it to you on a positive note. So the positive note is that Solana, and let me get the heat map. If I could find it, I think it's right here. If you look at Solana, it's pink. It's not red. That means it's down less than Bitcoin, much less. Now, usually when Bitcoin goes down, you can put a beta, B-E-T-A, beta onto Sol and figure out what Sol's doing. For example, the beta of Sol is probably around, 1.3 to 1.4 versus Bitcoin. So if Bitcoin goes down 4%, Solana should go down 1.3 or whatever times that decline of Bitcoin. But it's down less. Why? Because of this. Speaking of news, this is the big news of the week, in my opinion. Helium Mobile debuts CryptoWise network. So the Helium Mobile moved, similar to Render, it moved onto the Solana network. As you know, or should know from my other video, that Solana is becoming a specialist in DePIN, decentralized physical infrastructure. And Helium Mobile is a great example of that. So not only did Helium Mobile move to Solana and introduced mobile, but it's dirt cheap. So it introduced this in Miami, and it's only $5 a month. So that's all for today, folks. So just hang on. I think we may get a rebound, at least short term, and then go down again. So I hope you like this. If you did like what I said today or like this video, don't forget to smash that like button and subscribe to us. Take care and good luck. Bye-bye.